Good morning and welcome to Zicklin Talks Business. I'm Bruce Weber, the Willem Quaker Dean of the Zicklin School of Business, and I'm delighted to have you with us today for this timely and thought-provoking conversation. In recent years, online betting has exploded far beyond traditional wagers placed before a sports contest to now encompassing in-game micro bets and bets on almost any uncertain outcome, from weather to elections to the popularity of movies based on their box office revenue. Online platforms and technologies have made participation easier than ever, blurring the boundaries between gambling, prediction markets, and financial speculation. Should policymakers, regulators, and law enforcement authorities be concerned? Can beneficial innovation be assessed against the public harm? What are the broader cultural and ethical implications of a world where anyone can bet on nearly anything? What distinguishes the legitimate hedging of risk from unregulated and harmful gambling? Today, we're joined by two leading legal scholars who study the intersection of law, markets, and betting institutions. They will explore the rapid expansion of online wagering platforms, the regulatory challenges posed by peer-to-peer markets, and the ethical and economic implications of converting life's many uncertainties into tradable commodities. Larry Zicklin, graduate of Baruch 1957, leads the discussion today with Marc Edelman, professor of law at the Zicklin School of Business, Department of Law here at Baruch, and Professor John Holden, associate professor of business law and ethics at the Kelley School of Business, Indiana University. As usual, we'll reserve time at the end for audience questions, and please submit your questions via Zoom's chat feature to my colleague joining us today, Associate Dean Gwen Webb. And now I'll turn it over to Larry Zicklin, former CEO and chairman of Neuberger Berman, and a valued member of our MBA and undergraduate honors faculty. Larry, the floor is yours.
Bruce, thank you very much. This is a subject that's particularly interesting to me because I've been a sports fan all my life. And many of these bets are within the sports area. So let me begin. How do the prediction markets work? Are we dealing with agents who match our bets with somebody else on the other side? Or are we dealing with principals who in effect take the other side of the bets, similar to market makers in the financial world? Somebody want to take that one?
Marc, do you want me to jump in on that?
Yeah, John, why don't you get us started here?
Sure. So first, thanks, Larry. Thanks, Bruce and Gwen, for having me back again. It's always fun to get to be a part of these great conversations. When we think about traditional sports bets, when someone places a sports bet, they place that bet with a bookmaker. The bettor is on one side, the bookmaker is on that other. When we think about someone trading a stock, what happens in theory is the person wanting to buy a stock has a price that they're willing to buy at, and they need to find a seller who's able to match them. Most of us do this through a brokerage like Schwab or Fidelity, and they serve as that middleman connecting us, the buyer and the seller. Now, sports books and people placing sports bets historically look to balance the interest of the market. So they want close to an equal amount of money coming in on each side, and that's how they manage their risk. But the sports book is actually one side of that bet, whereas in a financial market transaction, oftentimes a buyer and seller is just matched by a matchmaker. When we have prediction markets, we're moving that bookmaker to a matchmaker, and they are just matching buyers and sellers in the marketplace at an agreed upon price.
And how do the various participants know what the price is? Are there a list of bets that are up there on the site? And if you want to match one, you take it.
Yeah, so exactly. So much like if you were to log into your Schwab account and look at the price of Apple today, which I haven't checked, but my guess, looking at the NASDAQ, is down. You have a price in mind, and so you would look up, your Apple stock, or the Giants' probability of winning on Sunday, and you would have a price in mind that you would be willing to pay, and in that contract, you could put that in as a buy order, and if they're able to find a seller to match that price, then you would have a contract there. And the companies do refer to these as contracts as opposed to bets, but they look very much like sports bets.
And how much does the middleman take out of this transaction? The bookie, in my example.
So historically, we know that sports books charge sort of between a 5% and 10% commission on bets. There's some variation in the market as it's still pretty new. One of the things that we have heard these prediction markets talk about is that there's a lower commission here. And this is, one of the things that they're promoting as an efficiency is they're charging a lower price because they're just matching buyers and sellers than a traditional sports book who relies on that added price, because that's where really their profit is, trying to balance that equal amount on each side.
Mm-hmm.
Does that mean, since it's a lower price, that a DraftKings is likely to be disintermediated by this new market, let me call it, which charges less?
I mean, Larry, I think that very much remains to be seen. I think one of the advantages that the traditional sports books, whether it be DraftKings or Caesars or BetMGM, have is the common sports fan understands exactly how to place a bet with the sports book. I think you could put anyone who's watched some type of sport in front of these, and they could figure out the activity very quickly. And I think it's really out there for the masses. When we look at the prediction markets, they're new. Nobody's really sure from a regulatory perspective where they fall, whether it's under state regulation, federal regulation, just frankly illegal. And they're also complex in their appearance. And I think while there's a segment of the population that might be running to these type of markets, there's probably also a very large segment of the population who are casual sports bettors who are comfortable with the way things look on DraftKings or a Caesars or a BetMGM, and I'm not convinced that they'll move over quite as quickly.
Just because of the complicated nature of it?
I mean, you would hope that. I mean, I think there's a complicated nature of it. And then secondly, on top of that, we like to believe that most people that are betting on sports are doing it recreationally and for a small amount of money. While I don't have exact data, I presume that, like many other businesses, we're operating under a 90-10 rule, where it's 10% of the people that are providing about 90% of the revenue into the sites. And for the person that's making the occasional sports bet, I just think as a matter of familiarity, they won't necessarily move over quite as quickly. I think for a younger generation, for people that are a bit more finance oriented, and also from people who spend a lot of time on the web, those are probably the places where the prediction markets are getting the largest attraction at this present moment.
I want to get back to the 90-10 in a minute, but first let me ask the question. Do you believe there's a legitimate economic or social purpose in the existence of the prediction markets?
John, do you want to take that, or should I take
Sure. Yeah, there's a lot of economic research out there that shows that there is value in prediction markets. Now, like a lot of things, when we talk about value in prediction markets, there's value around certain questions. Is there economic value, predictive value in, a July baseball game between two teams not in the playoff race? Probably not. Are there questions offered on prediction markets that offer economic insights? Yes. We certainly have evidence that some election prediction markets, particularly one offered by the University of Iowa School of Business, which has operated since 1992 or 1993 under a CFTC no action letter, which basically says, we know you're doing this. We aren't going to enforce our regulations against you as long as you agree to our conditions. And so they run this small scale academic market where people can use real money to predict the control of Congress. And we've seen since 1992 that it does statistically significantly better at predicting the outcome of congressional control than polls or sort of expert opinion. So we do know that there is some value here. I think what is getting clouded is people are taking that and extrapolating out that means that everything, if you put any question to the crowd, we're going to get better results than a poll or something like that. And it's being used to really sort of push this narrative that everything prediction markets do has some economic benefit.
If I could jump in, and John and I usually agree, and we partially agree here, I think he's actually being very kind to the prediction markets, maybe more so than we should be as business ventures. If we talk about economic value, if we're talking about in the context of economic value to society, it's interesting. If you go back and you look at gambling laws over hundreds of years, if you go back to the earliest gambling laws in the Middle Ages that came out of England, one of the original rationales for disallowing gambling was we wanted a productive society. Now, productive society at that point in time, at least according to one of the kings of England, was he wanted people spending their downtime practicing with their bows and arrows in case we went to war. Now, I think we've come a long way as a society from needing people to spend their time practicing with bows and arrows in case we're off to military battle. Not even that bows and arrows would be what we'd be using nowadays. And people enjoy a lot more recreation. And if the prediction markets, much like the traditional sports books or daily fantasy sports or good old-fashioned fantasy sports, are being used for simple recreation, and we look at them as a recreational activity, I think that's all fine and good. Now, what's very concerning to me is the way I'm beginning to see some of these prediction markets being marketed to the public, which is not as an activity for social enjoyment, but as another means of financial investment. And when you begin looking at the prediction markets in that way, if someone's comparing it to, say, investing into the stock market or investing in the S&P 500, I don't think these are economically efficient behaviors. I mean, on every contractual transaction, you're going to have a winner and a loser. The only clear winner is going to be the company that's operating the prediction market itself that keeps a percentage of it. So that's fundamentally different from the notion of investing in stocks for the long term or investing in the S&P for the 500 for the long term, as Jeremy Siegel has pushed. It's not going to be a situation where everybody benefits or most people benefit. It's going to be a zero-sum game. And it's very concerning to me to the extent that this activity is being pushed as being a method of investment rather than an activity of social enjoyment. I think that's where we start heading down a very perilous path.
Aren't we encouraging gambling by permitting these prediction markets? There'll be advertising, there'll be marketing. I can't watch a ball game on TV without seeing countless ads for DraftKings or MGM or whoever you tell me. And I'm assuming this will only get bigger with marketing.
I mean, there's no question about that. I mean, I was asked the other day about the legacy of Robert Manfred, who's retiring next year. He's been the commissioner of Major League Baseball for about 2 decades. And for better or worse, and I'll try to give it in a objective a way as possible, the position of Commissioner of Baseball was created in 1921 specifically for the purpose of trying to stamp out organized gambling. And if you look at the decisions that Rob Manfred has made over the past decade, now all of a sudden, baseball teams are allowed to have sponsorships with gambling companies. They sell their data to gambling companies. At the request of the sitting president of the United States, Pete Rose, who was a pariah for betting on baseball, is now reinstated. And we're somehow surprised when all of this betting is put in the face of every fan every single day that we're now going to have a scandal in baseball. As a society, we certainly have legalized behaviors that were going on before. They were going on before in the black markets. And there might be some positives to that about bringing sports gambling or maybe even prediction markets that were below the ground to bring them above ground. But at the same time, you're right. You can't watch a sporting event without seeing sports betting material. I can't even walk from my apartment to Baruch College anymore. And it's a 30-block walk, and I do it daily. I cannot do that walk without seeing a bus shelter that has an ad either for a sports betting site or a prediction site. And I'm concerned not by the legalization, but by putting that so front and center in people's faces. It's normalizing the activity and perhaps normalizing it not as a social activity, because I don't think there's anything wrong. Larry, if you, John, and I want to throw a few dollars in the pot and predict who we think is going to win a sporting event, I don't think any of us are harmed. But the way this is being marketed as a constant ongoing activity, and in some ways even a financial endeavor, I think that becomes detrimental to society.
I would think one day, if this continues, 401ks will be eligible to bet in the prediction markets. You mentioned Manfred and baseball. Can you talk about the scandal which we've just learned about over the weekend in baseball and what happened?
John, do you want me to take this, or?
Sure. Why don't you start off and I'll sort of jump in.
This is in the prediction markets. Go, I'm sorry.
So you have two players in Major League Baseball who were suspended with pay for a period of time, and for a period of time we did not know why. One was Emmanuel Clace, who was the closer on the Cleveland Indians, and another was another pitcher by the last name Ortiz, who had played initially with the Pirates and had been traded to the Guardians. So they're both currently on the Guardians. And what broke earlier this week, very similar to the federal indictment that we saw a few weeks earlier, involving Terry Rozier and other players involved with the NBA, an indictment was filed against these two players on the Cleveland Guardians for supposedly being involved in wire scams and fixing games by intentionally, and in the case of Clace on two particular occasions, intentionally throwing pitches as balls instead of strikes to allow people to bet on the single pitch being a ball and making sure that event came out.
So you can bet on a single pitch. Used to be we bet on the winner or loser of the game, but now you can bet on each pitch.
And this is uniquely ripe for corruption. I mean, these players happen to have gotten detected. I'm not certain why they did what they did, presuming they actually did it. It's an indictment. It's not a conviction. But I presume people would have figured that something as subtle as a single pitch would not have been easily detected. Now, one of the benefits of legal and licensed sports betting over the underground markets is there's a record of all the bets, and the legal and licensed sports operators in individual states are able to provide information to the leagues, theoretically information to the feds if they have unusual betting problems. But I'm to speak about bizarre or unusual or arguably even unhealthy behaviors. I think we could understand why human beings might want to bet money on who's going to win the World Series, or whether the New York Mets will win on a given day against the St. Louis Cardinals. The notion of betting on a single pitch has really grown with new statistical data and legal and licensed sports betting. And that does seem to be the type of behavior that's uniquely ripe for corruption by the players themselves.
Yeah, one of the things that we've seen in the years since 2018 and the Murphy decision, we've had this rollout of sports betting, is that the US really has not learned a regulatory lesson from what we've seen in places like the UK, which has had these concerns with these types of bets that really don't have an impact on the outcome of the game. And when you're allowing bets on things that are so insignificant, they're just ripe for corruption. And there's a famous story of a goalie, I think it was a second or third division English soccer team, and he was eating a pie on the sidelines during the game. A sports book decided to offer a bet on whether he would eat a pie on the side of the game during the next game. Well, he finds out about it and decides to do it on purpose. That has nothing to do with the outcome of the game. There's absolutely no reason to offer a bet like that. Betting on whether the first pitch is a ball or a strike, there's no reason to offer a bet like that. That if we want to make the argument that sports betting is a skill-based practice, betting whether the first pitch is a ball or a strike is flipping a coin. And so you're just destroying a lot of the arguments that people make in support of allowing sports betting if you allow these wagers that are susceptible to corruption.
You talk about corruption. I think I saw a program on TV the other day where the CEO of Coinbase, at the end of the interview, said, I know there's a lot of prediction market betting on whether I will say the following 5 words. And he said the following 5 words. It was just external to the conversation, and somebody won and somebody lost. I mean, that's insane. And talk about corruption. That's corrupt. Can bets be made in the prediction market? I'm going to call it bets, even though they call it contracts, that enable people to profit from tragedy, suffering, because they can bet on negative events?
So back when Congress passed Dodd-Frank, buried within Dodd-Frank are prohibitions on certain types of event contracts. One of those prohibitions is on gaming. And we've seen that there were questions about whether these sports bets classify as gaming. Right now, according to the courts, they do not. However, amongst the things that are prohibited and pretty, I hesitate to say there will be less debate around them, but that are explicitly outlined are betting on assassination, terrorism. So there are certain things that are prohibited. There's also sort of a catch-all, which apparently does not catch what is happening now, which is those contracts that are deemed against the public interest. So, in theory, under Dodd-Frank, the CFTC was given authority to not allow contracts that it deems are against the public interest. So there are certain contracts that aren't allowed. The enforceability of that would appear to someone who studies sports as pretty clear, but I would have guessed that the gaming prohibition prohibited the types of sports contracts that we're seeing now too. So I could be surprised.
Do you think the future will change the regulation, at least to any great extent?
So I think we're on a collision course at some point, and the solution that I think provides the greatest market benefit is for Congress to come and add clarity to the Commodities Exchange Act, this amendment to Dodd-Frank that was tacked on. Just clarify what the CFTC's authority is, and designate them or say that they're prohibited from regulating sports contracts, and those are matters of state law. I don't have a lot of faith in Congress getting that or seemingly anything done. So I think where we're going to see this change is through the courts. And we have an ever-growing number of lawsuits over these prediction market sites being filed. We now have a conflict. We have a conflict out of Nevada and Maryland. And so we now have different circuits reaching different opinions. So when we're looking at whether the Supreme Court is going to take a case during its, a term, a circuit split is a good indicator of that. And so you have this conflict between state law and federal law. The state regulators say these are sports bets. We want to regulate them and tax them like sports bets. And then you have these sites saying, no, we fall under CFTC jurisdiction. What we don't have a lot of right now is commentary from the CFTC. The CFTC is being fairly quiet since they lost a court case that allowed wagering or contracts on the 2024 presidential election.
John, when you say the CFTC has been fairly quiet, in a prior conversation we had, you told me about the example of Uber, which had a strategy of launch, operate, get big, get popular, get the public behind you, and then see if anyone has the nerve to shut you down. Mm-hmm. Is that what's going on here?
Yeah, well, I think this is very much an aggressive strategy that we see more and more companies, especially in this innovative tech space, looking to push. We saw it with Uber, we saw it with daily fantasy sports, where you say, this is what we are, so we're not that. We don't fit into the regulatory category that regulates taxis. We're a rideshare company. We're a tech company. We don't do those taxi things. We're this other thing. So you need to regulate us as something else. Those rules don't apply to us. Now, doing that is not easy. It's very expensive. You need to be very well resourced, have lobbyists and lawyers that are willing to put up a fight. And part of the challenge that we've seen with regulators and state AGs pushing back against these things is they have limited resources. And so, when you have a product like Uber or another sort of company that is you think is in conflict with your regulations, a lot of people really like it. So if you take that away, that becomes unpopular. And so in a lot of situations, these innovative entities that raise questions about the regulatory regime that they fall under can really sort of push the narrative until they have a sort of building a groundswell of support. And it makes it very difficult, at least sort of from a political popularity point, to go after them and shut them down.
Marc, the examples you gave of the NBA and what happened there, and Major League Baseball, what happened there, do you think this will lead to more regulation? Will these prediction markets be under pressure from the regulatory authorities?
I think there's a difference between should they and will they. I do think we need a lot more regulation in the space. And in terms of the things that concern me, at the end of the day, a couple of Cleveland Guardians pitchers throwing pitches for balls on purpose and corrupting a market is not my greatest concern. Larry, like you, I'm a big Mets fan. And there was a story that got just a small amount of attention yesterday. I feel it deserved a lot more. Everyone's focusing on Clace and Ortiz. The story involved an interview with Ryan Stanek, who's a relief pitcher on the Mets. And Ryan Stanek did not have the best of seasons this past year. And Stanek said that throughout the year, he was receiving death threats. And, it's not the first time that we've had something disgusting like a pitcher in baseball having a rough season and facing death threats for not performing well on the field. But we're having an increase in all types of threats being made to athletes based upon bettors. And not that anyone should have to endure this. Not that a grown man who makes many millions of dollars like a year, like Ryan Stanek, should have to endure it. But this is getting very widespread. I have a friend who had played professional tennis. She was a women's tennis player. She was not a top 100 ranked player. She was like a top 1,000 ranked player in the world. And she would tell me and shared with me regular email threats that were made against her. She wins, she gets threatened by gamblers. She loses, she gets threatened by gamblers. So we've reached a point. I mean, when NBA Commissioner Adam Silver suggested that we should have legalized and licensed sports betting so people could spend small amounts of money wagering on games and increasing interest in it, I mean, that does not jive with where we ended up, which involves major prediction markets and sites where people could bet, which are not limited in the amount of money, which are leading to threats to athletes on their lives. And at least in some of these cases where organized crime has purportedly been involved, um, who knows whether these are just very scary threats or something that someone will act upon one day if somebody doesn't fix a game or does not get the result that they want. And as a society, I'm not saying the answer is to make gambling illegal again. I mean, it would exist underground if it didn't exist above ground. But within the world of betting and sports betting, there are certain activities that are being legalized and licensed that involve such micro betting on such specific individuals that I'm concerned that we're putting the mental health and well-being of these individuals at risk simply by having these markets out there. I mean, for Congress not to get involved and look at it from this issue, as well as the consumer welfare issue of the bettor, I think that would be derelict of duty.
Well, that perhaps answers a question I've always had. These players that are involved, whether it be in the NBA or in Major League Baseball, are doing it for thousands of dollars. And in the course of their career, they're going to make millions of dollars, tens of millions of dollars. What is that logic?
And for each of the players, it might be different. With the recent accusations or indictments against the two Cleveland Guardians players, from what's public, I have no understanding whatsoever of why they did what they did. The one that stands out to me is Jonte Porter. That's the younger brother of Michael Porter Jr. He had played for the Toronto Raptors. He was a very end-of-the-bench reserve player who was banned by the NBA for life last year for purportedly feigning injuries to come out of a game and help people that were betting unders. And that seems to be the most developed case out there in terms of the why and not just the what. The way this story goes is Jonte Porter had been betting on sports himself, and he racked up some pretty substantial debts. And purportedly, the way that he was told that he could pay back those debts was to start engaging in those activities. Now, this kind of makes a little bit more sense. It doesn't make Jonte Porter's behavior any better, but it makes more sense. It's hard to understand how a relief pitcher on a team who's making $8 to $10 million per year could start messing with pitches for $5,000. I think it's a lot easier to understand this scenario of young athlete gets into financial debt, is encouraged to do this as a way of paying back the debt, and gets involved with the wrong group of people who are menacing or threatening or imposing and engaging in these behaviors.
One of the things that I'll add too is that I think that much of our sports integrity mindset, and I'm not a psychologist, and I should preface by saying that, has been around the idea that when people throw games, when there's match fixing, that this is a rational decision. It involves bribery where you have two willing participants. And when we look at what's happened around the world, that's happened sometimes. Sure, people take a bribe and they throw a game. That happens. But there's a lot of other reasons that people manipulate sporting events. And we've been really far behind in sort of bringing our integrity protections up to the current reality of what's happening. And, the NBA has been naive. I think Adam Silver was the loudest advocate for legal sports betting. I think, from the commissioner perspective, he really saw the future. But Adam Silver was pushing sports betting as an engagement tool. And I think that was a mistake, because I think this type of betting on these micro bets within a game that are really inconsequential, will a player make the next shot, they're integrity risks. And they really undermine the product on the court, on the field, on the rink. And they're really inconsequential to sports books. These are not propositions that are bringing in a ton of money for a sports book because they end so quickly. And so, we've got these events that really aren't economically beneficial, and there's just no reason to be even offering them.
Well, that moves me to another realm. Athletes make millions, and so they have a lot to lose if they get banned. But politicians and public servants make modest salaries, and it seems to me they're the most likely to be corrupted by the prediction markets.
Mm-hmm.
Is that a reasonable assumption?
I could make a joke about politicians and corruptions, I suppose, but I don't know. Many states have made it illegal to wager on elections. That there are a couple of great academic articles out there that did historical research onto some of these underground betting pools on elections back in the late 1800s, and the amount of money that was flowing into these betting pools. And states just think it's bad public policy. There's a lot of things that we don't let people bet on or buy contracts in, whatever we're calling it, because it's a bad look. In a regulated market, we don't let people bet on the Little League World Series because we don't think you should be betting on 12-year-olds. That is kind of gross to a lot of people. In the same way, we don't think in most places that betting on elections is a great look because it sort of undermines the purpose of elections. And yes, we know that some prediction markets have shown that these have a predictive ability, and there's something there. I think that the prediction market argument is a little bit different than what we're seeing rolled out in these widely available commercial markets where anyone can go in and place wagers. I don't know if this makes politicians more susceptible to corruption than they already are, but adding more things that could be corrupted is always concerning.
If I could just add one piece, because the proponents of prediction markets seem to like to push back on the narrative, especially with respect to elections, that it helps us figure out in advance who's going to win. And I take very big issue to that. One thing I hope that everybody that studies at the Zicklin School walks away understanding, and I hope they could hear in their sleep from a good statistics class, is correlation is not indicative of causation. And sometimes you have a third variable. Sometimes you have a reverse causation. And I am wondering sometimes, and at least in the most recent elections, when somebody who endorses candidate A for office throws a large sum of money into a prediction market in favor of candidate A, them doing so, especially when all the bus shelters in New York City now show that person as being favored based on the prediction market, is it possible, is it at least possible that this is not a good prediction that's showing us what's going to happen, but is actually changing a result? Is having people see a leaderboard of prediction and saying A is now predicted to win, and consequently by people liking to make choices that prove to be the choices that are winning, thus increasing the likelihood that they then go out and vote for candidate A. And if that's happening, and I can't prove that's happening, it's just an alternative hypothesis to what we're seeing in terms of the correlation, then it's actually possible that prediction markets are not giving us information about who's likely to win an election, but actually maybe corrupting elections by shaping our cognitive views in terms of how we see things. I mean, my colleague Nitzan Pakin had a really good Forbes article where she even directly addressed that point. And I don't think, I mean, prediction markets so much want us to believe that they're doing something of value, that even if we accept that view as a null hypothesis, we have to test it for the alternative. Because if it is the alternative, that's pretty darn scary.
Well, I think, one of the things that you're mentioning too is it's really double corruption, the example you're giving, right? Because you're undermining the market itself as well. You're pumping the market by funneling a lot of money in. So not only do you have the effect, in theory, of deterring voters and attempting to sway public opinion, but you're also manipulating the market to show an artificial support, which, if you're someone looking to do that, and one of the things we know with order flows is when large order flows come in, they often bring more orders with them. So you're inflating that market. If you then pull your money out of the market, you've basically got a pump and dump scheme.
And what you talk about, Mark and John, is actually frightening, or I find it frightening. I saw something in the papers the other day. I still read the papers. You remember those newspapers? I saw something in the papers the other day that said that Google had struck a deal to pipe prediction market data from Kalshi and Polymarket into its finance platforms. Are they in effect legitimizing both these companies and the prediction markets?
I mean, if we think about when Major League Baseball has sponsorships on things as being legitimate, I mean, Google is, I hesitate to use the M word, someone will push back on me from Google, but Google is a dominant company in terms of search. And when we have a dominant company in terms of search incorporating within what they do a site that's operating in what's arguably a gray area, of course it implicitly gives them credibility. I mean, when you spot something on Google, when you spot something on the fence of Major League Baseball, when you spot something on a bus shelter in New York City, implicitly we're giving credibility to that activity by having it be associated with what we consider to be a highly reputable business. I don't think there's a way around making that conclusion.
I just happened to see a statistic that the weekly trading volumes across the major platforms, Kalshi and Polymarket, recently hit a high of over $2 billion. And Kalshi, who's one of the primary platforms, reported annual trading volume of about 300 million in 2024. It's now seeing volumes of over 200 million in a single day. This thing is doing nothing but growing. Are you worried?
Yeah, I have concerns, about gambling's growth generally, and this specifically. My specific concerns here are this is effectively unregulated. The CFTC is really not regulating this. The contracts are self-certified, so they submit them because they're a designated contract market. And so there's not a lot of pushback. At the same time, the state regulators who have attempted to impose their regulations and the consumer protections that come with them are being sued every time they try and do that. And so, are they regulated by the CFTC? Well, they're under their jurisdiction, but there's not a lot of regulating going on generally. I think most regulation of sports betting around the country, with a handful of exceptions, has been fairly poor. There's not a lot of enforcement. There's not even a lot of reaction. Marc mentioned the threats to athletes. We've been talking about this for years now, and there's been virtually no movement at the state level to do anything about this, including simple things like banning people who harass athletes from betting on these apps. So the lack of regulation is largely just sitting on hands. It's really not happening, and I think that's a huge issue here.
If I could buttress what
Yeah.
John said, and I think we see entirely eye to eye on this one, is in the aftermath of the Murphy decision, when states wanted sports gambling, the talk was legalize, license, and regulate. And we heard this over and over again: legalize, license, and regulate. Well, our gaming commissions very quickly moved to legalize. And decisions they've made, and especially in New York, has been very geared towards taxation. What we haven't seen has been real regulation. And one of the concerns, and being here at Baruch, I'll specifically pick out New York as being one that's very concerning to me, is there seems to be a very close working relationship between the Gaming Commission and the lobbyists for the sports gambling companies. And the result of that is they found certain win-wins that are geared around legalize and tax. Legalize because these companies want to be in the space, tax to bring in revenue. But the Gaming Commission probably lacks the expertise and certainly lacks the interest in high-level regulation from a multi-stakeholder perspective. The gambling operators are okay with regulation to the extent that they think it considers integrity of actual matches because they want people to think it's real so people continue to bet. But that's a single stakeholder approach when you're regulating from the well-being of the gambling companies and maybe the sports leagues overall. What we need, and we certainly do not have it in New York. In New York, we're nowhere close to this, is multi-stakeholder regulation. And just to give one example of that, when states began with legalizing daily fantasy sports affirmatively, the first states that moved, Massachusetts, Maryland, and Tennessee, had in their regulations rules that you could engage in daily fantasy sports for up to a fixed amount of money per site, per person, per month. Massachusetts with 1,000 per site, Maryland with 1,000 per site, Tennessee was 4,500 per site. And then if you wanted to be able to engage for more money, you actually had to go through a process with the site to show financially you could handle that. Now, that was a great way of preventing people from going insolvent from sports betting. Now, the lobbyists pushed that away very quickly, and that never appeared in any sports betting bill. The regulators, I think, were very happy not to have this because it led to more taxation. But the well-being of the consuming public, one of our stakeholders here, is lost. And when we talk about whether the goal is to maximize shareholder value and maximize stakeholder value, the regulators are ignoring many of the most important stakeholders in this space. And to me, that's really concerning.
Well, the government is conflicted in this. They want the tax revenue, and they don't want to see their constituents go bust. Do the prediction markets take bets from anyone in the world? Is this global?
John?
So there are prediction markets around the world, and there's also sort of non-prediction markets, exchange betting, which is quite popular in various European jurisdictions. The markets serving Americans under CFTC jurisdiction are required to comply with the CFTC rules that would apply to, trading oil futures and selling those to the market. So those requirements are out there. In a lot of cases, when we look at sort of gaming regulations, we have a higher age limit. So most states, there's a handful that allow 18-year-olds to place legal wagers, but most states don't. But if you want to go open a brokerage account, you can be 18 and do that in most places. So we do have this differing sort of regulation out there. And so, these markets need to comply with CFTC jurisdiction. Now, the CFTC hasn't shown a ton of willingness to enforce regulation or push back against the markets being offered. So who knows? But in theory, at least, they fall under the CFTC requirements for people and have to operate in conjunction with those regulations.
And just before I turn this over to Gwen, my understanding is that the prediction markets have better tax rules, better for the better than the bookies have. Is that fair?
In theory, at least. So this remains something of an open question. So the Build Back Better bill, I believe it's called. One Big Beautiful Bill. Sorry, these acronyms of the bills are a mouthful. The latest one, the bill that changed the tax code most recently, in it was a provision that for professional gamblers, not people who are placing a $20 bet once a week, but professional gamblers, that they were only allowed to write off 90% of their gambling losses. Previously, you could write off 100%, provided they don't exceed your winnings. Under this change in the law, they're only allowed to write off 90%. So they could actually lose money. And so if these contracts are not gambling, if they are financial products, the taxation scheme is very different. And in theory, you could place futures bets that would only be subject to a long-term capital gains rate instead of being taxed as ordinary income like gambling is. So,
and you could write off 100% of your losers against your winnings.
Exactly. So from a professional gambler's perspective, there is the potential that this dichotomy of regulation here provides a real arbitrage opportunity if they were to move to prediction markets.
Gwen, your turn.
Hi, everybody. This has been really interesting. I have a question here. It's from one of our current students. If a player making millions of dollars purposely throws a ball or purposely turns the ball over for a few $1,000s, is there any hope of purifying sports again? Hasn't embracing sports betting made it all too comfortable for players to fall prey to these kinds of scenarios? If a zero-tolerance policy of a lifetime ban isn't large enough deterrent, what is?
Well, to our wonderful Baruch student who asked the question, I'm going to take you back to the 1950 NCAA men's basketball champion, because the winner that year was the City University of New York. At that point in time, Baruch was part of the City University of New York.
City College.
And if you, City College. And if you ever took a class in the 17th Street building, it's possible that they would have come over there for business courses. Well, that team, as well as many other basketball teams in New York, shaved points. They didn't lose games, but they won by less points than they otherwise would have, because there was an organized crime spring that was encouraging them to throw points for money. And the person who was purportedly the middle person for this was a basketball player at Columbia University, who went on to play in the NBA by the name Jack Molinas. And Jack Molinas was ultimately banned from the NBA for life. Now, I give that example because we're coming up on 75 years from that point in time. And we had these issues back then. So I don't think this is new. And if sport has survived in that 75-year period between Jack Molinas and now, I think it's likely that it will continue to survive. I just wanted to provide context that we're dealing with a very old problem, albeit it's certainly magnified today based on prediction markets and legal and licensed sports betting, and no doubt the amount of money that's involved.
Well, no, I didn't know the history. That's very interesting. I'm sorry the history included Baruch College. But here's another question that has come up. How should we think about equity and inclusion in this space? Are these platforms disproportionately extracting value from vulnerable populations? Are there any safeguards that actually work?
This is a great question, and it's one that I haven't seen a lot of material data on. We do have some anecdotal data. One of the things we know is that in states that have legalized sports gambling, we're seeing increases in credit card debt. We're seeing increases in bankruptcy. And so that information is beginning to come out. What we have not learned from what has been learned in Europe, Australia, and a number of other jurisdictions is that this was entirely predictable. That without safeguards in place, and some jurisdictions are moving to deposit limits, how much money you can put in on a specified basis. And as Marc mentioned, when that came up in daily fantasy sports, that received huge pushback. And this has been, one of the things with the regulation of sports betting or prediction markets, or all of this really, is that the consumer safeguards have lagged very far behind. And, we're really just beginning to talk about them, despite the fact that people were flagging these issues. People were flagging these corruption threats at the beginning, that there didn't need to be betting on these things. But nonetheless, the legislation and the regulatory regimes basically were ignoring these concerns. So, I'm hopeful that as these conversations mature, the only thing that we've seen regulatory change on has been tax rates, and states are starting to learn that this promise that having more competition in the market through low tax rates would result in a lot of tax revenue didn't turn out. And so you've had Ohio, Illinois, a number of jurisdictions raise their tax rates on sports bets because the revenue that they were told was coming never showed up.
And Gwen, I just want to add one line to that. And that is that in preparation for this webinar, I did some homework, and it turns out, as you might expect, that young people, young men specifically, 18 to 34, who rely on impulse more than anything else, are most subject to this.
Actually, I have a similar question that kind of builds on this. Do you think that there are material risks from AI-driven personalization and behavioral analytics on the part of the platforms to, really zone in on the populations at highest risk, putting them at even greater risk?
They do it everywhere else. Why not?
Mhm.
I mean, they do it in the soap market and in the drug market.
I'll tell you one thing that really stands out with some of the sports books, including the ones that I've experimented playing with, is that they tend to send out pop-up notifications and free bets for what we consider to be the riskiest type of bets. They will give discounts, promotions, pop-ups, and better rates to engage in parlays of 4 legs or more. Those of us that understand the way sports betting works understand that these sites want you betting on things where you have to pick 3 or more things consecutively right, as opposed to just one. That's where their odds play out the most favorably. And I think for those who are comparatively less educated, These are the most concerning kind of bets to make because your risk of winning becomes very low and you might be enticed by the upside, but they're arguably the most predatory type of bets out there.
And the most profitable for
Yeah.
the sites.
Mhm.
It's very worrisome. We are at the end of the hour. I want to tell our participants, our attendees today, that our December 9th webinar will be coming up in a month. It deals with what changes when private equity firm buys interest in a public accounting firm. How does private equity ownership, with a focus on generating profits and eventual resale and exit, affect what is a very traditional partnership? Larry's guest will be Robert Kneckel of the University of Florida and Shiraz Kaji, CFO of SLR Capital Partners. So that's to look forward to next month. For now, thank you, Larry, thank you, Mark, and thank you, John, for a really, really interesting conversation.